Have you ever dreamed of building the career and life you truly want, but felt unsure where to start? The Career Capital Collective podcast with Sarah Robson and Kaylee Gaspari is your blueprint for success, offering actionable advice on navigating career pivot. Join us in redefining success on your own terms.
Hi, everyone. This is Sarah Robson. We're back with another episode for the Career Capital Collective. Today, I am so honored to share that my sister is joining us as a guest on the podcast. We're really going to be focusing on how she defines success on her own terms. And Amanda is my best friend, younger sister. She prefers to go by Robby, and she is the founder and general partner of Modern Technical Fund, MTF for short. And earlier this year, she made the bold leap to leave her partner role at Cowboy Ventures, based in San Francisco, and go out fully on her own. I would say right now is one of the toughest fundraising markets. Also, she raised money for the fund over the summer, and she raised an oversubscribed $22 million fund. She's also a Forbes 30 under 30 in venture capital, but I don't think this even scratches the surface for all of the things Amanda has accomplished. So, Amanda, welcome to the podcast.
Thank you. I should be giving my intro all the time.
I'm technically your older sister. However, I always joke that I'm the little big sister. I'll give like a little bit of background and some snippets on one story about you that I just love so much. So me and Amanda grew up in a big blended family, a divorced family. And so us kids always stuck together. There are 5 of us in total. We went to the same university and we share almost all of the same friends, which is such a blessing. And so, Amanda, I've been your cheerleader since literally day one. But one story I want to just quickly mention is when me and you were living at our dad's house in literally a mattress on the floor in Toronto, and you were working as an intern at Citigroup, and you received a return offer. So it would have been really easy for you to go back full time, which would have been the safe option. And I remember our dad was like sending you like messages like you should accept this and whatnot. And instead you decided to turn that down and then cold call pretty much every investment bank across the United States to get a full-time offer at an investment bank in San Francisco, which then you ended up taking. And so with no IB experience, literally created your own opportunity and ended up getting the job offer. And that was so inspiring to me. And that is the main reason that I had the confidence to get a job in New York after graduating. So I thank your bravery because it showed me that it was possible to also get a job in the US after Western. So that is my short story. Amanda, what does success look like to you when you were a kid? And did you ever imagine raising a $22 million fund or working in venture capital?
So I like that you started with that story because the short answer to your question is no, I didn't imagine this at all. But I think if I look at my career over the years, even though it's still quite new, a lot of it is just continuing to take the opportunities that come up and find opportunities to work with people that I thought I could learn a lot from and that were smarter than me, and then continuing just up-leveling. So when I was younger, I guess when we were younger, I didn't really know exactly what I wanted to do, but it's funny actually at the time, because we were living like an hour from Toronto, I would just picture myself having this corporate job in Toronto. And that's what success looked like, which is funny because now I feel like I went through more corporate venture capital and now it's just me running a fund, which is much more informal in a way, at least from like the day-to-day of it. But yeah, at the time I thought like that was professional, that was success, that's what it looked like. I think a lot of that came from our dad, because I looked at him and looked at, I didn't like, I knew he was in sales. I knew that, he had a lot of important meetings. He was a people person and, saw him go to a fancy office. So when I was really young, that's what I thought success was. And then as I continued to kind of learn and develop and get older, my definition of success changed. And I would say that the bar for success just kept going up. So to tie that to your story, when I was working in corporate banking at Citibank in Toronto, that initially was my dream job. If you kind of pattern match, that's what I said when I was younger. But then when I was there, I learned the job and I felt like I wasn't being challenged enough. I was lucky to go to an undergrad business school, Ivy, where I had a lot of very, very smart friends who were very ambitious. A lot of them went to the States, worked in investment banking or worked in private equity right out of college, and they kind of up-leveled things for me. So then I looked at my job at Citibank. I'm like, this is interesting, but I think I could challenge myself more and do more. So turn that down to then chase something in the States where I thought I'd be challenged more and learn more. And I feel like my career has just been a continual kind of chasing for more and like never quite reaching the, meeting the success bar that I set, because every time I get close to it, then I try to raise it. So I would say even now, like running my own fund isn't the end goal. Right now, my end goal is to have a top performing fund and be one of the, if not the best seed and pre-seed investor in the sectors that I cover, security and software infrastructure. So yeah, but like, who knows, maybe when my fund is 5x plus or 10x plus, then the bar will change. But I just think that like continually chasing more is how I would define success. So like never quite hitting the bar, but always raising it.
Are you going to be happy though, ever? Or do you not think success and happiness are correlated?
Well, this is kind of a cheesy thing to say, but I don't think success is like a destination or happiness is a destination. I think happiness is growth. Like happiness is continuing to learn, develop, and improve yourself. And I think if there comes a point where I stop growing, then I would be less happy.
Mm-hmm.
So I think success you can define in milestones, like say, okay, I successfully did that thing that I wanted to do. But I think continuing to have a raised bar, which means that you keep having to grow and improve, is what happiness is. And it's funny too, because even I would say this is something I really respect about our dad. He's retired or like semi-retired, but he's still learning and doing new things, like publishing a book, which is very hard for someone who has never written anything in their life, really, except for maybe emails. And so there's just like this constant new thing that you're chasing that requires you to learn and develop more. It's not quite like never satisfied. It's just like satisfied in the pursuit or in the journey.
Totally. I totally agree. What do you think your biggest failure or setback has been so far? And what did that teach you about success? And I'll just say that we both have seen our dad be very successful and fail at things. So I think we've been lucky to kind of know that it's okay to fail too. But curious what you view as like your biggest failure thus far. What has that taught you?
It's a good question, because I wouldn't necessarily say that there was anything that happened where there was this like definitive failure. Well, I can talk about when I felt most like a failure, even though in hindsight, I think I learned a lot from it and it wasn't something that I regret or I wish didn't happen. But I was in investment banking. So this is after cold calling my way to San Francisco. I was working at an investment bank. My first year was only like 7 months long. And I'm like an achiever and also have historically and still am to some degree someone who really looks for external validation too, especially with work or like, when I was in school, it was a lot of teachers and praise and looking for high grades, or in work wanting a kind of sign off of like, oh, you're top of your class, you're amazing. So first year, which was really, 6-7 months, got like great marks as a first year analyst. And then in my next year, I got put on this project and it was really overwhelming. I'd never hit my limits before as far as like how much I could do on no sleep. And I was pulling like multiple all-nighters, didn't ask for help on this project and kept trying to like meet insane deadlines without sharing that it was actually impossible for someone to do it. And so I made some mistakes on this project, like sent out a model that had issues in it. And then because of that, I didn't get top marks. I got like mediocre to average. I think I actually was like slightly below average that year. And that was so hard for me because I feel like mentally I viewed myself as someone who was an achiever, who was always successful. And I had probably the closest thing to a full mental breakdown. I remember calling dad, actually walking by the Transamerica building in San Francisco, like hyperventilating, crying, like I could not handle it. But in hindsight, I wouldn't say it was I would say that's where I felt most like a failure, but it wasn't where I was a failure. I think it was a moment where I had to learn how to pick myself back up and start being my own cheerleader a little bit more. And to the point of this podcast, defining success in your own terms, starting to, feel successful when I felt like I did the best job I could on something. And in that case, like I learned a lot from it. I learned what my limits were. I learned that I, could ask for help on some things. And it was really hard, but I mean, I learned a lot from it. And then in a way, probably stopped looking for external validation as much to make myself feel successful in a way and kind of having my own bar and my own sense of it.
Do you remember what dad said to you?
I think he was actually just generally really supportive. And I think part of me expected him to kind of come down hard on me as well. But he was really just worried about me and how I was doing and tried to get me in a better headspace. He didn't say anything specific, but it was just like I felt supported after, which was really nice, especially since, we butt heads before on work things. But yeah, it was a really dark moment. And I feel like getting through that, it was funny because after that, I had another like 6-7 months of banking. And then during that time, I was also recruiting for my first job in venture capital at Norwest. And it weirdly helped me because I had to, grow a thicker skin and build up my own confidence for venture capital interviews. And I feel like by the time I interviewed at Norwest, I just had, a lot more mental hardening that had happened. I could just manage my emotions and myself a little bit better. So it really actually just helped.
I love that. I think I always go to dad as well in the tough times because he gives the unfiltered, raw, unhinged advice, whether you want to listen to it or not. I would say one of your qualities or your best qualities, in my view, is that you have so much grit and you'll always just figure it out. Do you think that is something?
I think you had so much grit. I think you always figure it out.
But do you think it's something that you're born with or is it something that you build? And what built yours?
Oh, that's a really good question. I think it's definitely something that you build. You build grit for yourself. And actually, I want to hear your answer to this question too, because I'm very curious. But I feel like you build grit for yourself by going through hard situations and realizing after that you can survive them and in a lot of cases be successful in them. And the more hard situations you go through, the more kind of hardening and like grit you develop. Actually, I think this is very evident. I do a lot of work in Israel. I invest in a lot of ex-8200 Israeli military founders. And they're some of the grittiest people I've ever met. It's because they had to go through such extreme training and extreme situations, quite literally war from age, I think when they first go in, it's like they're 18 till, and a lot of them stay through their 20s. And so when they go to start a startup, which for a lot of people is the hardest thing they'll ever do, they've already been through life or death type situations where they're quite literally tasked with protecting the country. And that builds an insane amount of grit. And it's unique to that group. And it's funny because, like, to your question, are you born with it or do you develop it? Almost everyone I've met that's come out of Unit 8200, but the IDF in general.
What is Unit 8200? What do, like, for our listeners that don't know what it is?
Oh, yeah, sorry. So Unit 8200 is a very specialized research unit. So there's a lot of people who come out of this kind of like elite unit of researchers that will go on to create cybersecurity companies because it's like the high-tech unit. They're developing crazy new technologies that they can use to defend the country. So it's where just a lot of innovation happens. And it's just all like a lot of the smartest people that are in the IDF. So this applies to everybody who goes through that kind of military type training. And they all come out with a level of grit that I rarely see in US founders or like US or Canadian people. So I think it comes from that lived experience and realizing that you can just get through really, really hard things.
I would agree. It's something that is built over time. I would say for me, there's been like 3 different types of situations that have consistently happened in my life. One is visa issues. Ever since I moved to the US, it's been really hard for me to stay here. I never feel like I'm safe in the country. I usually only have 1 to 2 years per work visa. I have 3 abandoned green card applications just due to different work situations or work choices. And it now is just like neutralized because I just know I'll always figure it out. The first like situation was incredibly anxiety inducing. And then every other one has been very anxiety inducing. However, I just know I'll always figure it out. And then I would say the second thing is like, I've ended very serious relationships multiple times where like I thought that they were my person. I thought we were going to get married. And then you break up and it's like that person's died and you lose like your other half. Currently processing a situation, a breakup, and it's been really, really difficult. I would say the breakups are definitely like one piece where you just feel so broken and then you have to just pick up the pieces. And then I would say career change with the visa issues has also come career changes. I would say jobs I've gotten and then the visa fell through, or jobs I've lost and then I lost the visa. And so I guess it's really connected to immigration, but the immigration and job situation has been But every time that has happened and I've like lost what I wanted or it's like slipped out of my hands, the next place I go has always been better. So I look back and I can't say, oh yeah, I wish that didn't happen, because I either like was able to get a job that was a couple, say, levels higher than the last one that I had, or I had the balls to start my own business. But in the middle of it, when you're like, whatever XYZ happens, it feels like so devastating. But it's like anything, you just like have to process it. But then when it keeps happening, you like just build that resilience and that grit. So to answer the question, I would say it's built. So I would agree with you. Back to you, because this podcast is focused on you. Regarding the fundraise, because like having the balls to go out and fundraise by yourself in this economy, very challenging time. And that also during the summer, which for those that don't work in finance, I would say the fundraising over the summer is the most challenging times, because you're trying to get investors' attention and they're like on vacation, or they work for like pension funds, or they're high net worths. And the summer is just the worst time in general. So what was the moment when you decided, I'm going to do this, I'm going to raise my own fund? Like, can you walk me through what was going through your head?
Yeah. So just for context and timeline. So I formally left my last job and venture in June of 2024, started raising right away, and then closed the fund early this year. So early 2025. I'm coming up on a year of like investing the fund. I made the decision to start the fund actually on my honeymoon. Or I wouldn't say made the decision, but it like started coming to my head of like, hey, I want to do something different. I want to do something new. I want to start something. And I think that thing might be fun. And I think it was because I had quiet time to kind of like chill, like clear my head, think about what I wanted. And kind of to my earlier point around like continually learning and growing and developing, I took my first venture job now 10 years ago at a really big venture fund called Norwest. Loved Norwest. Was there for 4 years. I was doing all early stage investing. So that included seed stage investing, pre-seed, which is really when it's a few founders and an idea. They don't have a product, they don't have revenue, all the way up through Series B. So when they're kind of early scaling. And I didn't know I was going to love venture capital as much as I did, but I really took that job out of investment banking because a recruiter called me. I really liked the people. I thought they were super smart. And I thought it sounded really cool to work with founders long term, because in banking, it's very transactional. You help them sell their company and then you're done. And so I joined Norwest and I fell in love with the job. Like I was obsessed with it. I loved the kind of like self-starter aspect to venture, where the job really consists of sourcing, like AKA finding companies to invest in, diligencing. So really like digging deep and being like a true seeker, finding out like if these are people, if this is a market tailwind that you want to invest in, and then winning the deal and then supporting the companies. And it just kind of hit on all the things that I love. Like I love the hustle, the chase, the kind of self-starterness of sourcing. I love the like deep diligence and research of kind of determining if you want to invest in a company. And then I love the competitiveness of winning a deal. And then I'm a heavy extrovert. So I loved working with these founders and feeling like I could have even at like a small impact on helping them be successful. So like very randomly kind of came to the job and fell in love with it. Did it for 4 years at Norwest. Norwest is a really big fund. So we were doing, like I said, early stage seed all the way to kind of early scaling Series B. So I went to a seed only fund because everything that I was sourcing, bringing in that I really loved was super early stage. And I was at a seed fund called Cowboy for 5 years. Really loved it too. And like could just hone my skills when it came to seed and pre-seed investing. And then it kind of hit a point where I had all these ideas of the kind of fund that I would want to build, because the fund I was at was a generalist fund. So I had partners doing fintech and general enterprise, and I was doing cybersecurity and software infrastructure. So developer tools and data infrastructure. And there were kind of like strategy level things that I wanted to do to build the best cyber and software infra practice. Like I wanted to have a team of heads of security and heads of technology, like heads of engineering, that were working really closely with me in the fund and helping give product feedback to founders to help them get to product market fit faster. I wanted a team of first sales or first marketing hires at some of the best cyber or engineering tool companies to help my founders learn how to do sales. Because usually if it's a first time founder, they've never run sales or run marketing before. So I had all these ideas, and that kind of led me to the path where I was like, I want to start a fund around this. And I was also just at a point where I felt like I had learned enough in my career. I wanted to do something more entrepreneurial. So I started at like, on my honeymoon, okay, maybe I want to do something more entrepreneurial, and then really reflected on what I wanted to do, where I thought I could be most successful based on all the things I'd learned. And that's how I landed on starting Modern Technical Fund. So yeah, I couldn't have told you like a year before that I wanted to do that. It just kind of happened as I kept chasing this like growth and like kind of new opportunities that I saw in the market.
Okay.
In this case, it was an opportunity to build something that I thought would be quite differentiated. So yeah, sorry, I don't know if I answered your question, but that's how I kind of came up with the idea and then started in summer 24.
Do you think if you didn't have many friends starting their own funds, it would have just been like, how do you even start? Because I will say your network of friends in San Francisco is the most impressive. You have, say, like 20 friends that have all started their own funds. Is it safe to say that them showing you that they can have their own funds, you're like, wow, I could 100% do this too, based on my experience?
Well, the funny thing is, I actually made a lot of friends with people who had started their own funds after I decided to start my own fund. There was one person in particular who I am still really close friends with, who was very encouraging of it. It's this guy named Tim Chen who runs a fund called Essence. He's just an amazing human, like great investor, but even like better person. And we've been running a podcast together, interviewing open source founders for 5 years, I think now. And he was very encouraging of it because yeah, like to your points earlier, there's a lot of self-doubt that comes in when you're going to do something on your own, put yourself out there. Even though I felt like I'd learned a lot and had developed my investing skills enough and like had enough of a track record to do it, there was a lot of self-doubt that came in, and he really helped me work through that. I didn't meet a lot of the other people who were starting funds until I went out to raise one. And then it's funny, I've made some really close friends the last year and a half, because, you know, you're kind of going through shit together. Like you're
Right.
fundraising, you're dealing with LPs together, you're doing it for the first time.
How did Tim like help though? Did he just like plant the seed and then like follow up? Or did you like then follow up with him?
No, so I had the idea to do it and I like ran it by him.
Right.
And then when it kind of wavered on it, he encouraged me, which was really helpful. And then also he introduced me to some of his investors. So one of my biggest investors is an investor of his as well. So I don't want to jump too far ahead, but I'm happy to talk about the fundraise itself. The number one thing for that was helpful to me is I got referrals to investors by friends that ran small to medium sized funds. And that's how I met all my LPs.
Got it. That is leading to the next question, because it's like, okay, so yes, you want to raise this fund, but then who do you know who to ask? And is it the high net worth individuals? Is it the family offices? Is it the pensions would be too big, but like, how did you even like map out that landscape?
Yeah. So I got really humbled when I went out to fundraise because I leave in June, decided to start this fund, was feeling confident in it, and then realized that I don't know LPs because all the LPs I knew from Cowboy were way too big for me. So I started getting introductions, like I said before, from friends who'd started smaller funds. But I didn't realize how hard it is to get an LP to a yes, because especially in the beginning, because there's no urgency. So many of them will wait until your final close. Mm-hmm. It's kind of a chicken problem where, you know, you have this group that you're talking to, but they're all like waiting for final close, but then you're not going to get to final close until you have first close done. Some people are pretty ballsy and will just like, you know, do one close, but I wasn't confident enough to do that because it was my first time doing this. So it took like a few months of like, I got humbled and realized that it was going to take more time than I thought. And like I said before, I started meeting other friends who were starting, because everyone was introducing me to their friends who had left firms to start funds. And I met some amazing people. I made really good friends with this woman, Anne Lee Skates, who left Andreessen to start a fund, who's super badass and like became like a really close kind of like confidant through this process. I have a friend who started another separate fund called Holly Ventures, like just started to meet people where we were going through the same things at the same time. And we all helped each other with LP intros and also just like advice and how to work through LP processes. And then I got really lucky. A friend, this guy Sunil, who runs a fund called Ubiquity, he introduced me to my first big LP, this guy Chris Dubas at Ahoy Capital. And we just really hit it off. Like, I feel like he really understood what I was trying to build. He loved the community aspect of it. He was one of the first investors in First Round, which is one of the most, if not the most prolific seed stage community fund, or like a fund with a really strong community around it. So I feel like we just clicked, and he was my first big check into the fund, which really kind of kicked off a lot of momentum. But what I learned early was, as with anything, like with a company fundraise or just in general, running a company, like you want momentum. And so I got advice and I took it to just start closing people. So kind of went to my immediate network, closed my first couple million through just friends, got some like intros to founders that had made money, and, like high net worth individuals that started to bring in like bigger checks in like the 250 to 500K range. And then the thing that really helped is your investors are really the best sources of leads for other investors, kind of the same as companies raising. Cause it's like, hey, I believed in her like enough to invest. Here, I'm referring her to you too.
Yeah.
So it kind of starts the flywheel, and it also just broadens the network of LPs that you have. So people are talking about you. So that's where I started. And then I got Chris. Also, like Chris was amazing. Like he came in first close. Like no one, like I realized after even more, like people don't do that, especially like big fund of funds. Like a lot of people want to de-risk things. And then that really helped with other like institutions. So then I was about halfway fully committed by January. And then I'd gotten the advice, it might have been from Anne actually, from another emerging manager that was like, hey, you have enough now. Like just call final close. And between now and then, meet with as many investors as you can, kind of like a sales process, like fill your pipeline.
Mm-hmm.
So from first close, which is like in October 24 to December 2024, I was just meeting with like every LP I could, like every single one. And so I had a database of like 200 LPs, like institutional LPs that I've been meeting with. And then in like January, I call final close, and that got everyone to move. And the thing that I learned is, I mean, people in general operate on urgency. So if you're not the like top 1 to 3 like priority for them, they just won't prioritize you. And it's not that they don't like you, but it's like you're just not a priority. They have other funds that are, telling them that they are like closing with or without them.
Right.
So I made myself high priority for folks, and that got me to my final close. And then I targeted 20 and ended up closing 22. And then the week before I was supposed to close, I had an investor drop out unexpectedly for 2 million in it. So I was initially supposed to get to 21 million. He dropped out. I was at 19. And there was part of me that's like 19 is the same as 20. Like I don't need to change my strategy or anything.
Mm-hmm.
I could just close on it. But then there was part of me that was like, no, like I'm not closing under my target. So then I kind of did the same strategy where I looked at folks who were, because I was still taking meetings with new folks. Like until you're closed, you keep meeting with folks.
Yeah.
I kind of drummed up a short pipeline of like 4 or 5 groups. And I basically went to them. I'm like, you all have like 2 weeks if you want to even get in. And then a couple of them ran at it. And then I ended up getting this awesome group that came in for 3 million at the end. So I ended up at 22 million. So yeah, I learned a lot. I weirdly kind of enjoyed fundraising by the end. To your earlier point, like I learned so much and it was so hard, but then I felt like I could do this really hard thing, which made me just really happy.
Yeah.
And I think it grew a lot. So yeah, it was really, really hard, but it was extremely satisfying to like go through that and feel like, oh, I can do this hard thing.
That is like a beyond hard thing. Like this isn't just like this is like a behemoth. I am so proud of you. I just want to say that.
I appreciate it. It's funny. But then my husband always says another level, another devil. So it's funny because like now I have the fund and now it's like, okay, winning the best deals in my sector.
Right.
And then I win those deals and it's like helping make those companies like incredibly successful.
Right.
And turning the fund like many, many times over. So there's like always a new mountain to chase. But I think it's like enjoying the small wins, but also just like enjoying the fact that you're never quite there and you're always like chasing something new.
Yeah. I mean, it keeps you motivated. Would you say that the strategy around your fundraise and like the scarcity and then having the hard deadline, is that the same approach that companies that you're investing in also apply?
The best fundraisers do. Like, I have a company that is really good at fundraising. I think I can talk about it because they announced their fundraise. It's a company called Keycard. It's an amazing team, second-time founders. So they really understand how to fundraise too. They're just really good at like constantly fundraising. I think it's the same for companies and funds. Like, you're never quite done fundraising because you're going to probably need to keep raising. If you're a company, you go from Series A to Series B, Series C. On the fund size, you go from fund 1 to fund 2, fund 3. So it's like not treating it as this like one and done thing, but treating it as this continuous thing that's part of your job. Like fundraising is part of being a venture-backed company. It's part of being a fund manager. The other thing is like not relying on like any one LP or any one VC fund. I see companies, especially first-time founders, make this mistake all the time where they're like, I've been talking to this group for like months. They love us. Like they're basically going to give us a term sheet. I'm like, well, have they given you a term sheet? No. Okay. Talk to other folks. If you need a fundraise right now, till you have a term sheet, you don't have anything really. Like you can't rely on it. And I treat my fundraise the exact same. Like for instance, I will of course give preferential treatment to my current investors and want them to get whatever allocation that they want in my second fund. But it's not that like, oh, it's in the bag. For sure they're going to invest. Like I expect them to look at what I've done, compare me to others in their portfolio and make a judgment call on whether they want to invest or not. And then also there's things that could happen on their end too. Like they might have a hard time fundraising. So, I could perform like top quartile or top 10% and I have a hole to fill because they just couldn't fundraise themselves. So you have to constantly have this like, it's not really like an anxiousness, but it's just like the awareness that like nothing's done until it's done. And it's funny. It's the same with companies too. Like companies can look like they're doing so well, but I've seen so many, go from being like the highest flying stars to crashing and burning. Like till you have cash, actual cash in the bank, like you don't know. So it's like being comfortable in that zone of discomfort.
Totally.
Not knowing. Like there's a lot that you just don't, you're not going to know. And you just have to be okay with that.
How did you get comfortable with that?
It's a few things. So I would say like being comfortable. Well, venture in general is like a job where you have to be comfortable being uncomfortable because you're investing in companies that are super early. You don't know which ones are going to do really well. You develop kind of a nose or like taste for founders that, have qualities that you look for that you've seen other founders be successful with, but you don't know for sure. Like I've seen exceptional founders have like outcomes that aren't great because they were in a really bad market. Actually, the best company I've ever worked with, or like my best investment is a company called Drata, security compliance company. That same team built an education technology company before, which is an insanely tough space, but it especially was back then. They were selling to universities. It's a really tough like customer segment. They were first time founders. And the outcome was good, but it wasn't like a Drata like outcome. Drata is now worth like 2 billion, well over 100 million of revenue. Like they're growing really fast. And it was an amazing team, but their first market was not great. And the second market was amazing. So I think like you just have to be comfortable with some things working out, some things not. And, you learn a lot along the way, but it's never like a sure thing ever. It kind of comes with the territory of being a venture, like being comfortable, being uncomfortable. And then to actually answer your question of like, how do you get comfortable in that zone? Well, there's this book called Thinking in Bets, which is all about gambling by this famous poker player named Annie. And she talks about this concept of resulting, which is trying to score how good you are at something by the result of it. So for instance, you get lucky in poker, you have a good hand and you win, and then you assume you're amazing at poker, but you might have gotten lucky. So instead of just looking at the result, you instead score your process and start like fine tuning your process. You constantly improve. So the likelihood that you can source diligence and win an investment in a really top tier company keeps going up, but it doesn't mean that you're not going to have mistakes along the way. So I think that's what you get comfortable with. It's about being comfortable with focusing on your process rather than the result.
Yeah. I mean, that makes sense. I feel like the hard thing with venture, or at least in my own experience working in growth equity, is like, at what point do you accept that like a company's not doing well and then just stop spending time on it and then just focus on the winners? Or do you focus on the ones that aren't doing as well to help improve their outcome?
Oh, this is a really good question. I think it's something that everyone struggles with in venture. Like I would never like abandon a company. I just wouldn't. I would want to help them get to an outcome. Like I've helped many of my companies get acquired. Like I'm always developing relationships with heads of corp dev at companies that are likely buyers for my companies. And yeah, I like stick with them to the end, but I try to make sure that my time is really spent on the best companies and like helping them be more successful, because there was also a power law in venture, which basically means that companies that start seeing success in like a new market or start dominating a market, growing really fast, that success compounds. So the ability for them to, 5x in a couple of years versus a company that, isn't breaking out to even like 2x, it's just like higher. So the sake of the fun, you really want to spend time helping those. But it's hard because like, the ones that are struggling oftentimes like need a lot of help. And so they ask you for help and it's like hard because it does take a lot of time. So it's like something you constantly struggle with. There's never like a, good way of like setting up your time to be like, I'm going to spend 80% of my time in the best companies and 20% of the other. It just doesn't always work that way.
Right. Well, this leads to the next question. Like, what does a regular day look like for you? I feel like you are really good at setting boundaries. And like, how do you set boundaries with folks that are trying to eat up like too much of your time? Say a portfolio company, an investor, etc.
So, okay, I would say a typical day is quite chaotic and it always looks very different. Like for instance, this week, there's a big security engineering conference in Vegas. I'm going to be there Tuesday to Thursday. I'm hosting a CISO lunch for one of my companies that sells to CISOs, a chief information security officer, which is the buyer for one of my company's products. So I'm hosting a lunch with basically a bunch of prospects with her. So I would say a typical week is a combination of a lot of pitch meetings. Like most days I'm taking 2 to 4 pitch meetings of new companies that I might invest in, diligence on companies that I'm really digging into, and helping portfolio companies. Those are my priority. And then I would also say, in addition to those 3, fundraising is also important. So those 4 things take up the most amount of my time. Relationships with other investors are tricky. Like I spend a lot of time with other investors, especially ones that focus on my space, but there's a lot of folks who just kind of want to like shoot the shit. And I'm like, look, like if you're not investing in cyber or dev tool or data infra companies, there's not really a reason for us to be chatting. But yeah, it is hard. Like you have to get really good at time management because in venture, it's a very undefined job. Like the job is to find, diligence, and win investments in the very best companies and support them. And like, that's like, there's no, steps to do that. So you just have to get good at making sure you're always spending your time in service to that and things that aren't in service to that or in less of service to that. Because, you could get a really good lead from, like I could get a really good cyber lead from a VC who was a consumer investor because it's their ex-roommate or something. So like,
Right.
it is important to keep good relationships across the board, but you just kind of have to be mindful of your time. And then on portfolio companies, the thing that I really try to do is I actually care less about them wasting my time and I care a lot about them wasting their own time. So I'm hyper direct with my founders where if I feel like they're wasting their time on things that are not going to help them get to product market fit, like I'll be very direct and be like, this is not a good use of your time, my time, whatever. Like my perspective is like to get to like product market fit, you have to, and it's funny because like for most companies, it always comes down to the like same things. If it's a direct sale company, aka they sell directly to their buyer versus like something that's bottom up or product led growth, you want to get to like 10 high quality customers as fast as possible, which might take some time because it might be a hard product to build. But like that's the thing they need to focus on. So my founders are focused on other things that are not that. I'm like, if they're like, let's go host this happy hour, let's do this thing. And I'm like, is this in service of finding those first 10 customers? If it's not, or like I have companies that focus a ton on like their branding and things like, I'm just like, this is just not the most important right now. Like you need to be really good at like focusing on the most important things. So that's, I try to navigate them towards, hey, like what is the most important thing right now? And are you spending your time doing that versus like I'm wasting my time? Cause I'm like, it's more about you wasting your time.
Would you say that now that because you have your own fund, your time management is better because you only have to focus on the things that actually move the needle versus like corporate bullshit?
Yeah. Oh my God. And actually, I wouldn't call it like corporate bullshit, but I think like one of the things that like you have to do in venture or like in any job is like you have to, if you have a team, everyone needs context and that requires time, requires trust. Like you need to kind of all know what everyone's working on. But the thing that's interesting about venture, I feel very strongly about this actually. Venture is in essence, like an individual job because you don't have multiple functions. There's one function. There's finding companies to invest in them and supporting them. Yes, in supporting them, you can have like a platform team that helps with customer interest, recruiting, whatever. But the job of investing is very individual. And I actually think, and more often than not, groupthink can come into partnerships and dilute the quality, especially with early stage investing. Later stage, there's like more things you can look at. There's more benchmarks around metrics, how fast they're growing, customers, whatever. But the earliest stages, it is very much like someone's instinct or taste around a certain founder profile, around a certain market that others who have not spent as much time in that space or with that founder are not going to be able to see, or it would probably be a consensus investment. And so I actually do think that like venture lends itself to the individual investor more than like a group of investors collectively, like thinking through investments together. That's just how I feel about it. And so I actually think I'm way more effective now and also am much more efficient because I don't have to spend time, trying to convince my team or others or do kind of like work to prove out certain market trends that I just know to be true. I can just focus on investing. So yeah, I think like it is amazing. And like, it's funny because I had a lot of my LPs and other LPs and people be like, oh, you're going to build out your team. I really don't think so. Like I'm really enjoying the work that I'm doing now. And I think it's some of the best investing I've done in my career. And it just keeps getting better and better. And so to potentially dilute that by building a team kind of freaks me out.
Yeah. I think there's a misconception that like building a team means that you're better and stronger, but I think it can be a massive distraction. Depends on the person.
Yeah. Well, and it's also like a company is different, right? Because you have different functions. You have engineering, building products. you have sales, you have marketing. Like, there's distinct functions,
Mhm.
but in investing, there's like not really. There's like one job, and there's like
Yeah.
supporting, finance, whatever if you want, but like the job itself is individual. Like you've worked at a venture firm for a while, and every investor kind of operates in their own portfolio. Like they do their own thing. Like later stage, you kind of like you can use a kind of stack of associates, VPs, partners where you're kind of working together on something. But at the early stages, there's not that much except for the founder and the market tail one. So it's kind of like, yeah, you could do that on a team, but like I don't actually know if that lends itself to better investing. Like I think like me and an associate wouldn't make me better necessarily than just me. But I don't know. That's like my current thinking on it.
Yeah. So back to like the kind of ethos of the podcast, which is building what does success on your own terms mean? How do you define success like professionally and personally? And how has that changed since say Western going to university?
So I would say success now is a moving target, but it is delivering like top tier returns to my investors with this fund, making this fund one of, if not the most sought out cyber and dev tools, seed and pre-seed stage fund for the best founders. So that's what my definition of work success is now. My definition of personal success is very different. My definition of personal success is spending as much high quality, engaged time with the people that I care about and love. So like family, close friends, my husband, as I can, and making that extremely high quality, very like engaged time. To my early, maybe like coming full circle to what I said earlier, my definition of success was the most success as I knew it when I was younger. So like dad, he was like the bar for success. And now my bar for success is different. And it'll probably be different years from now too.
Yeah, totally. And if someone listening, say, feels stuck as maybe early in their career or changing careers, what's like one mindset shift that you would tell them to make, say, right now?
Well, mindset shift would first be like, don't be the victim to your own life. Like if you're not in a good situation, first, like realize that you have options. Most people have options and realize what your options are and what are the best ones for you. And, keep growing, keep developing. But I think being the victim in your own life does not serve you at all. So kind of like, taking inventory of where you're at, figuring out where you want to be, and then like start mapping out how to get there. And just like, taking ownership of it. Like the most successful people out there have had setbacks and things that are hard. To our like conversation about grit, you can look at it as a like learning experience and opportunity. Change the way you think about where you're at, because you're probably not in as bad of a situation as you think you are.
Yeah. It reminds me of like that saying, I think Mel Robbins said it. It's like you're one decision away from like your dream life. And it's like not as far as you think.
That's a little cheesy, but yeah, I guess I did. But I just also think like, most people hold themselves back. They don't think they're capable. They don't think they have options. I have a lot of friends that'll complain about their jobs. And I'm like, I know you have options.
Right.
Like you're just deciding not to look at them. We create our own mountains and like restrictions on ourselves. By the way, actually, one tip for those kinds of people out there, read the book Untethered Soul, because that really helped me.
It's a hard to read book, but it's a good one.
But it very much, it talks about like removing the boundaries that we set on ourselves of what we can and can't do. And just like seeing the possibilities out there. So my tip, read that book.
Read that book. And if you could go back 5 years, so I guess 2020, and give yourself one piece of advice, what would it be and why?
I mean, I actually really loved how I lived 2020. I would just be like, keep enjoying it. Like, I don't know. I think like, I'm really happy I worked remote. Well, we all had to work remote, but then I traveled. I didn't just stay in San Francisco. I lived with a really good friend. I lived with you for a bit too. And it was just like, I feel like we kind of took an experience that was really horrible and like made the best of it.
Okay. So final question. What is next for you, not just in business and MTF, but as a human? And what are you hoping to, let's say, build or change or experiment with next?
Oh, I would say personally, I want to spend more time with like less people, if that makes sense. Like really make sure I get a ton of quality time with the people that matter and like spend less time with just, people who I like, but I don't necessarily feel like challenge or expand my horizons. So just being more mindful and thoughtful about the time that I spend.
Amanda, thank you so much for being on this episode. It was such a pleasure getting to interview you as my sister. And thank you all for listening to another episode of the Career Capital Collective podcast. Notes will be in the episode, and we look forward to releasing more episodes with awesome podcast guests like Amanda Robson. Woo!
Thanks for tuning in to the Career Capital Collective podcast with Sarah Robson and Kaylee Gaspari. We hope you feel inspired and empowered to take charge of your career and build the life you truly want. Follow us on Instagram at Career Capital Collective.